Bank stocks surging on Monday. Two bank ETFs, the KBE and the KRE, rallying over 1% and hitting fresh highs. Now the question is, can the run continue? Today on Trading Nation, we've got Boris Schlossberg and Ari Wald, they're your Trading Nation team. Ari, you're watching the financials in your latest note. Tell us why.
Yeah, I think the strength that we're seeing today, and it started a couple weeks ago, I think that's marking a new leg of outperformance here. I think the way to plot it is looking at the entire sector, the financial spider ticker XLF, relative to the overall market versus the S&P 500. And what's happening here is that it's been more or less a market performer year to date and really just starting to break higher from this year-long consolidation pattern. And what gives us conviction that this strength can continue is just how broad-based it's been. It's not just the banks, it's the brokers, it's insurance companies, it's the online exchanges, it's the asset managers. So what we think this is a new turn, a round of leadership that should last into the first quarter of 2018. Buy financials, they're breaking higher.
Boris, do you agree with that sentiment? And if so, are there any specific names you're looking at?
Well, there are two stories on the fundamental side to why the financials are breaking out. One, of course, is because they're getting a benefit of the idea that the tax cut is going to benefit them as an industry the most. But the second, I think, the more interesting thesis that Ari is seeing in the charts is the market is starting to bet that growth is going to pick up and the yield curve is going to steepen, and that is going to help financials quite a lot. Usually, there's a tremendous amount of lag between the time when the Fed starts to hike rates and when the yield curve starts to steepen, about 18 months or so. So we're getting to that point now, and I think the market is starting to bet on the fact that growth really picks up in the first half of 2018, and that is why you're seeing such good charts. So I kind of agree. Yes, it looks like all systems go for the financials.
Ari, back to you. Are there any names, any pieces, subsectors, let's say, if you want to call that are getting left behind? I know you mentioned a lot of different groups, but who's maybe not catching up?
Within financials or the market broadly?
Within financials.
Within financials, and that's a great question, Eric, and we do take that view where whatever we think about the sector, what's going to outperform, what's going to underperform, and we can look at these trends versus the sector. What's going to outperform? We think it's going to be the likes of Bank of America, JP Morgan, and E-Trade. What's going to underperform, what's been left in the dust, I think it's multi-line insurer AIG. If you look at AIG versus the overall sector, XLF, it's breaking down. In absolute terms, it really hasn't been able to break out to the upside, and I think this kind of more muted absolute performance continues to underperform a much stronger sector trend.
Boris, what about you? Anything that gets left behind here?
Well, I kind of agree that JP Morgan is probably going to be a very good bet to the upside because they benefit across the whole spectrum of their businesses on this whole growth idea. To the downside, I don't have any specific names off the top of my head, but to the upside, I very much like Morgan as the sort of straight up bet on the idea that growth in the U.S. picks up and they're going to get a benefit from every sector of their business going forward.
All right. Good stuff, guys. Boris, Ari, my thanks to both of you for joining us here on Trading Nation.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.